Welcome to the Bankers Tech Talk video series, keeping tabs on the developments in the fintech space. I'm Joy Macknight, Managing Editor at The Banker, and I'm joined by Jaidev Janardana, who is CEO of Zopa, a UK peer-to-peer consumer lender. Jaidev, thanks so much for joining us today.
Thank you.
Can you tell me a little bit about Zopa and sort of how you differentiate yourself in a pretty busy marketplace?
Yeah. So Zopa was the world's first peer-to-peer lender, and what really differentiates us is our track record. So we have been in operation for the last 14 years, and in that we have lent responsibly. We have been able to give predictable returns and positive returns to our lenders, and we are the only peer-to-peer lender who has actually had experience managing credit through a cycle and through the great financial crisis. And we are able to do that because we are prudent in the way we manage risk. We put customers first, and we lend to customers who banks would love to lend to. These are homeowners. Think of them as policemen, policewomen, nurses who make about £40,000 in income. Their banks would love to lend to them, but they come to us because we offer a far better online experience, and we offer far more clarity on their approval and on the rates that they would get.
Okay, but there seems to be a bit of a shakeout in the peer-to-peer lending space. What is Zopa's strategy for survival?
I think, again, it's about, for us as a business, it's about starting with the customer first and making sure that we continue to provide great value to our customers. So continuing to innovate on their behalf is something that we have done, and we continue to do so. For example, last year we became the first prime lender in the UK to provide real rates, so to speak, to our customers. So in most loan marketing in the UK, you get to see your representative rate, which only about half the customers get. In our case, we actually show the actual real rate that you're going to get, which gives you a lot more certainty and ability to manage your budgets and makes you feel in control. And those are the kind of innovations that we continue to do. Of course, given the track record that we have, and the other thing that we have done is, we've got and worked for getting a bank license. So now we have a license with restrictions, and that allows us to also offer more products than we have done before, credit cards, auto finance, as well as savings. It also diversifies our funding model, which I think gives us a lot more resilience than our competitors.
Okay, you've given some examples about why you're looking to launch a challenger bank, but again, it's a pretty busy marketplace. So again, how are you going to sort of differentiate yourself?
Again, our differentiation comes from the capabilities that we have. As I said, we have been lending for about 14 years, and in that actually produce great outcomes for both us, the people we lend to, as well as the people who have lent through us. And in that, we have, I think, an unparalleled ability as compared to the other challenger banks out there, that they haven't had that experience of lending, which is why they're focused more on kind of building current accounts. Whereas our strategy is differentiated. We are focusing on the lending side of things, so loans, credit cards, auto finance, and the savings side of things, and make sure that people get good returns on their savings, as well as people who borrow from us actually can get fantastic products. And building that lending track record takes time. You have to build the data. You have to understand how to do that, and we have been doing that for 14 years, and that clearly differentiates us as compared to the rest of the challenger banks.
Okay. You're very busy, actually, because you're also doing a big funding round at the moment.
Yeah.
What are the challenges to trying to raise funds in today's environment?
So the biggest challenge today is Brexit and the political uncertainty that comes from it, and investors trying to figure out which way that is going to go. But I think what is very good for us is private markets continue to be very deep. There is still money to be had if you're a tech-led, consumer-focused business, which we are, and I think we have a compelling story to tell because of the track record of us having managed a growing and fantastic business that consumers love over the last 14 to 15 years. So given our track record, I feel good about raising money. Of course, I would love to not have the uncertainty of Brexit hanging over our shoulders.
Okay, my last question is really about what are your future plans beyond sort of launching the Challenger Bank and the funding round? What do you hope to do in the next couple of years?
When we look at the kind of financial services market, the thing that really inspires and motivates us is the fact that consumers today feel stressed and anxious about money. They feel disengaged with their money. And our aim is, and see kind of money and dealing with financial services providers as a pain. Our aim is very ambitious. We don't want to remove that. We don't just want to remove that pain. We actually want to make people feel good about how they're feeling managing money. And that's our long-term goal. And if we did that, I think we believe we would create the best place for consumers to manage money. That's our long-term goal. And what we want to be is the biggest bank in the UK or the biggest financial services provider in the UK in terms of number of happy customers we have.
Excellent. Well, thank you so much for your insights, Jaidev.
Thank you.